Everyone wants to know which stocks will explode in 2025. But let's get one thing straight, nobody can predict the market perfectly. What we can do is look at trends, fundamentals, and strategies to find strong companies that are worth holding for the long run. This video isn't financial advice. It's financial education. My goal is to teach you how to think like a smart investor, not just throw stock tickers at you to gamble on. First, let's talk about the golden rule of investing. The best investors don't just buy stocks. They buy businesses. Warren Buffett, Robert Kiyosaki, and even modern YouTubers like Jeremy Lefebvre all say the same thing: know what you're buying and why you're buying it. So how do you know which stocks to buy in 2025? Start by looking at megatrends. What industries are set to grow in the next 5 to 10 years? A. Renewable energy, cloud computing, semiconductors, and data analytics are dominating right now. That's why companies like AMD are on so many investors' radar. AMD has been competing strongly in the semiconductor space, especially with the AI boom fueling demand for powerful chips. If AI continues to grow, companies supplying the hardware are likely to benefit. Then there's Palantir Technologies. Love them or hate them, Palantir's data analytics platforms are being used by governments and businesses worldwide. As AI and big data expand, companies like Palantir become more critical. But before we go further, here's the most important tip for beginners: don't just copy stock picks. Learn the basics. Understand financial literacy. Learn how to read earnings reports, balance sheets, and market trends. The best investors treat the stock market like owning a piece of a company. If you wouldn't buy the entire company, why buy the stock? Another great strategy is diversification. Don't put all your money into one company hoping it'll make you rich. Spread your investments across different sectors: tech, healthcare, energy, consumer goods. It lowers your risk. 2025 will still be full of uncertainty. Inflation, interest rates, and global events all impact the market. That's why index funds and ETFs are great options for beginners. They let you invest in many companies at once, including the biggest players on the NASDAQ. But if you want individual stocks, look for companies with strong fundamentals. Growing revenue, solid profits, low debt, and a competitive advantage in their industry. For example, Apple, Microsoft, and Nvidia are still considered strong long-term plays because of their dominant positions in tech and AI. Then there are emerging opportunities, companies innovating in renewable energy, biotech, or space exploration. They carry more risk but also more potential upside. Robert Kiyosaki, author of Rich Dad Poor Dad, often says wealth comes from owning assets that produce income. Stocks, if chosen wisely, can be those assets. But here's the reality: the best stock for you might not be the same as the best stock for me. Your age, risk tolerance, and financial goals matter way more than a random list of tickers. If you're new, focus on financial literacy for beginners. Learn what terms like P/E ratio, market cap, and dividends mean. A free finance course on YouTube or a good investing book can be life-changing. Also, don't forget the power of compounding. The sooner you invest, the longer your money works for you. Even $50 a month in an index fund grows massively over decades. Smart goals matter too. Don't just say, "I want to be rich." Set targets. How much do you want to invest monthly? What's your expected time horizon? And how will you track progress? And please, don't invest money you can't afford to lose. Stocks go up and down. If a dip in the market gives you anxiety, you may need to rethink your strategy. For 2025, look at companies riding the AI wave, clean energy, and data growth. That's why AMD, Nvidia, Palantir, and Microsoft get so much attention right now. But remember, great companies can still be bad investments at the wrong price. Always check valuation. A company might be amazing but overhyped. Jeremy Lefebvre, a finance YouTuber, often stresses patience. Buying quality stocks and holding long-term usually beats panic buying and selling. Millionaires aren't made from hype stocks. They're made from consistency, patience, and smart investing habits. The NASDAQ will continue to be a playground for tech investors. But don't ignore sectors like healthcare and energy. Some of the best gains happen in industries people overlook. And here's something crucial: invest in what you understand. If you can't explain what a company does in one sentence, you probably shouldn't buy it. Free courses online can teach you the basics of analyzing a company. Learn now, profit later. Financial literacy is your ultimate money-making tool. Robert Kiyosaki says, "The rich don't work for money. They make money work for them." Stocks are one of the best ways to do that. But it's not about chasing best stocks to buy. It's about building a long-term portfolio that matches your goals. So if you want my advice, start small, stay consistent, and invest for decades, not weeks. 2025 will bring opportunities, but also noise. The best investors know when to stay calm and ignore the hype. So what stock are you looking at this year? Drop it in the comments, and don't forget to subscribe for more smart investing tips.